advanced planning for CBS brokerage. Today I'll be discussing the topic of IRC Section 6166 elections, part of a three-part series in which we just be discussing the post-death tax planning for liquidity of federally taxable states who have closely held business interests. So as I mentioned, the three-part series, the first one will be on IRC Section 6166, the second will be on Graegin loans, and finally trust-owned life insurance, the one most people are familiar with. So, what is IRC Section 6166? IRC Section 6166 is an election made on the Form 706 tax return or estate tax return, in which the executor or the representative makes an election to go ahead and defer the estate tax for a period of time. The deferral can be up for a period of 4 years of interest only, and then for the next 10 after that, interest and principal. It's a really good deal. The initial interest rate for the loan will be around 2%. Additionally, there are qualifications to be able to use a Section 6166 election. Not all states will qualify. First of all, the business owner has to have at least 20% of the value of closely held business interest owned personally in the decedent, I should say. Secondarily, the asset has to represent 35% of the decedent's estate. They have to be a U.S. citizen. The representative has to make that election in a timely manner on the 706 tax return. Additionally, there oftentimes will be a lien placed on interest that the loan is being applied for. So here's some modeling of what Section 6166 would look like. In this example, I have a $53 million estate with about $18.5 million in estate tax liability. Not initially, when we're assuming that they qualify because they have more than 35% of the estate owned a business owned in their estate. About 1.9 million is due up front, and the rest of the 16 million is due over time. At the end of the 14-year period, 4 years being interest only and 10 years being interest and principal, the total amount of interest and taxes paid is $20,836,000. So that's about total interest is $2,797,000. So that interest is not deductible. Now that is very different than Graegin loans, which would be on another video. That will be part 2 of the series. And that's one of the differences we'll discuss. So this is actually essentially like a government-funded loan on the estate tax. So to elect the Section 6166 election, you need to do it on the 706. It's on Part 3 of the estate tax return. Additionally, you need to fill out Form 632-4A, which is a lien form for qualifying for the deferral of the estate tax. So finally, I want to put this election in context of the other two choices I had mentioned, that being Graegin loans and ILITs, irrevocable life insurance owned, irrevocable trusts funded with life insurance. I have this visual where you can see the red arrow and the blue arrow. This is lifetime planning. That's after death. This being the demarcation to the IRS. And basically, the difference is that IRS Section 6166 elections and the Graegin loans are loans that are made essentially after death. IRC Section 6166 is really a deferral, but the point is it impacts cash flow after death. Life insurance impacts cash flow during lifetime. Life insurance advantage is that it gives you some visibility into how, at any point in time if you were to die, how much money would be available for liquidity. So it wouldn't be necessarily one technique versus the other. They actually oftentimes will be used in conjunction with one another. It's not impossible to have all three techniques. In fact, you can have a Section 6166 and qualify for a Graegin loan, vice versa, and so forth. The downside to these techniques, the 6166 and Graegin, is it's very difficult to necessarily qualify especially for the Graegin loan. The additional requirements for life insurance policies that you need to qualify mortality-wise, but assuming that you were able to do that in time, you would see that you'd use these techniques in conjunction with one another. I hope this has been helpful to you. If you have any additional questions or a case you'd like to discuss, or federally taxable estate or business owner situation, please give us a call, look us up on the internet, or email me directly. Thank you so much for watching.